Something unprecedented just occurred in the silver market. While you were sleeping, the price did something it hasn't done in decades. Banks are making emergency calls. Traders are scrambling. And the gap between what you pay and what they pay just hit $54 per ounce. January 16th, 2025 will be remembered as the day everything changed. But here's what they're not telling you. The real shock isn't the price, it's what happens next. Welcome to Currency Archive, where we cut through the noise and bring you the economic truth that matters to your financial future. Now, if you've been following precious metals for years, maybe even decades, and you appreciate straightforward analysis without the hype, do me a favor, hit that subscribe button right now. Why? Because what I'm about to reveal changes everything you thought you knew about silver. And I'm curious, where are you watching this from today? Are you in the States, Canada, Europe, Australia? Drop your location in the comments, because what's happening in your region might be very different from what they're reporting. Now, let's talk about what just happened. January 16th, market. Not because someone says so, but because the math just hit a point most people will never see until their screen shows a price they don't recognize. There was a man who watched this movie before. He was there in the late 70s when silver ran from $6 to $50 in months. He was there in 2008 when it got crushed with everything else and then quietly put in the most boring, ignored decade in its 5,000-year history. While gold got the headlines, silver was left for dead. Everyone forgot it even existed as money. Let him tell you something that took him 40 years to understand. The best trades in history never looked like good trades when people made them. He has watched markets his entire adult life. He has seen bubbles inflate until rational people lost their minds. He has seen crashes so brutal they ended friendships and marriages. He has seen assets go from worthless to priceless while the whole world laughed. And he is telling everyone right now, silver is the most asymmetric setup he has witnessed in decades. Not because it is some hidden secret, not because nobody knows about it, but because everyone knows about it and still refuses to act. That is the definition of asymmetry. When the fundamentals scream one direction and the price whispers another. When the logic is overwhelming but the crowd cannot hear it. When history hands you a roadmap and the world throws it in the garbage. Look at what is happening right now. Global government debt has crossed $100 trillion. That number is so large it has lost all meaning. Nobody can comprehend it. Nobody can repay it. And nobody in power has any intention of trying. The only solution they have is the same solution governments have used for 3,000 years. Debase the currency, print more units, make the debt smaller by making the money worth less. This is not conspiracy, this is arithmetic. Every major central bank on earth is trapped. They cannot raise rates enough to matter because the debt service would collapse their own governments. They cannot cut rates enough to stimulate because inflation is already eating their citizens alive. So they do what bureaucrats always do. They stall. They lie. They print quietly and hope nobody notices. Meanwhile, silver sits at prices that would have been considered a joke 20 years ago when you adjust for all the currency units created since then. In 1980, silver hit $50. That was 45 years ago. Today it trades around $30. Do people understand what that means? Exposed to inflation, exposed to currency debasement, exposed to 4 decades of money printing, and the price is still below its 1980 high. There is no other asset class on earth with that profile. None. Real estate has gone up 500%. Stocks have gone up 1,000%. Even gold has made new all-time highs. But silver just sits there, ignored, forgotten, left for dead. And here's what nobody wants to talk about. The supply situation is not getting better. It is getting worse. 70% of silver mined every year disappears into industrial applications. Solar panels, electric vehicles, medical devices, military technology, semiconductors, 5G infrastructure. These are not recycling-friendly uses. This silver is gone forever. Buried in landfills, scattered across rooftops, embedded in circuit boards that will never be recovered. Meanwhile, mine production has been flat for a decade. The easy deposits are gone. The new discoveries are smaller and lower grade. The permitting process takes longer every year. And the major miners would rather buy back stock than explore for new supply. This is not a temporary imbalance. This is a structural deficit that compounds every single year. The silver that exists above ground is disappearing into the industrial machine faster than it can be replaced, and yet the price acts like there is infinite supply. That is the contradiction that will resolve itself violently. He has seen this pattern before. He saw it in commodities in the early 2000s when everyone said natural resources were dead forever. He saw it in emerging markets when everyone said those countries would never matter. He saw it in agriculture when everyone forgot that the world still needs to eat. The setup is always the same: prolonged neglect, structural underinvestment. A narrative that becomes so dominant people stop questioning it, and then reality reasserts itself in the most brutal way possible. Silver has been neglected for so long that an entire generation of investors has never seen it move. They think it is boring. They think it is a relic. They think it belongs in their grandmother's jewelry box. That is exactly the psychology that precedes the biggest moves. When does the turn happen? Not before, not during, after. After everyone has abandoned it. After the last analyst stops covering it. After the last fund manager says it will never work. After the price has done nothing for so long that watching it feels like punishment. They are there now, right at that exact point. The point of maximum apathy, maximum neglect. Maximum contradiction between fundamentals and price. And the same conditions that triggered every historic precious metals explosion are now more extreme than they have ever been. More debt, more printing, more industrial demand, less supply, less investment, less attention. This is not a prediction. This is pattern recognition. The pattern has repeated for centuries. It will repeat again. The only question is whether people see it before it happens or after. There is a moment in every monetary system when the math becomes irreversible, when the debt grows so large that no amount of growth can service it, when the interest payments alone consume more than entire nations produce, when the only question left is not whether they will print, but how fast. That moment was past years ago. Most people just have not realized it yet. The veteran has studied monetary history for over 4 decades. He has watched currencies collapse in real time. He has held paper money that became worthless between breakfast and dinner. He has seen governments promise stability while their printing presses ran through the night. And he is telling everyone with absolute certainty the United States government cannot repay its debt in constant purchasing power. Not challenging, mathematically impossible. $36 trillion in federal debt, $1 trillion in interest payments every single year. That number grows every quarter, every month, every week. The deficit is not shrinking, it is accelerating. They are borrowing money to pay interest on the money they already borrowed. This is not fiscal policy. This is a Ponzi scheme with a flag. And every major economy on earth is playing the same game. Japan, the European Union, the United Kingdom, all of them trapped in the same spiral, all of them hoping the music never stops. But it always stops. It stopped in Rome when they clipped the coins until the silver content was gone. It stopped in Weimar when wheelbarrows replaced wallets. It stopped in Argentina and Zimbabwe and Venezuela when the zeros multiplied faster than the presses could print. The pattern is always the same. Governments spend more than they collect. They borrow the difference. The debt compounds until it cannot be serviced, honestly, and then they inflate. They do not announce it. They do not apologize for it. They simply create more units of currency until the debt becomes manageable in nominal terms. The debt gets repaid, but in confetti, in purchasing power that has been quietly stolen from every saver and every worker and every pensioner who trusted the system. This is not a prediction. This is a confession hidden in plain sight. Every central banker knows this is happening. Every Treasury Secretary understands the endgame. They just cannot say it out loud because the moment they admit the truth, the game ends immediately, so they speak in code. Inflation is transitory. We have the tools to manage it. The dollar remains strong. These are not statements of fact. They are incantations, prayers disguised as policy, and while they pray, the debasement continues. Since the year 2000, the dollar has lost over 40% of its purchasing power. Since 2020 alone, the money supply expanded by 40% in just 2 years. 40% more dollars chasing the same goods and services. That is not stimulus, that is dilution. And here is what makes silver different from every other asset on Earth. Gold is recognized as money. Central banks hold it, they report it, they accumulate it. The market prices gold as a monetary asset. But silver? Silver is priced like tin, like copper, like zinc. The market treats silver as just another industrial input, a commodity with costs and margins and quarterly earnings. It completely ignores the fact that silver has been money for longer than gold. It ignores the fact that more human beings throughout history have used silver as currency than any other substance on Earth. It ignores the fact that the word for money and silver are the same in dozens of languages. Argent in French, plata in Spanish. The linguistic memory is still there, even if the financial memory has been erased. This is the mispricing. This is the opportunity. Gold trades at a premium because the world remembers it is money. Silver trades at a discount because the world has forgotten. But forgetting does not change reality. The gold to silver ratio sits near 90 to 1. That means it takes 90 ounces of silver to buy 1 ounce of gold. The historical average is closer to 50. In the Earth's crust, the ratio is roughly 15 to 1. At every major precious metals peak in history, the ratio has compressed violently. In 1980, it hit 15. In 2011, it hit 30. Both times, silver outperformed gold by multiples. The ratio is a coiled spring, and it has been compressing for so long that when it releases, the move will be unlike anything most investors have ever witnessed. This is what happens when a monetary asset gets mispriced for decades. The correction does not come gradually. It does not come politely. It comes with violence, the kind of violence that turns portfolios upside down overnight, the kind that makes front-page news and forces analysts to invent explanations after the fact. They will blame speculators. They will blame manipulation. They will blame everything except the obvious truth. Silver was money, silver is money, and the market is about to remember. Let the veteran tell you how markets really break. They do not break when everyone sees the problem. They break when the problem has been building silently for years, when the inventory reports still look stable, when the headlines report nothing unusual, when the analysts publish their forecasts with calm confidence. And then one morning, everything changes. Not because something new happened, but because the market finally noticed what was already true. He has seen this pattern destroy fortunes and create them. He saw it in oil when everyone believed the world was drowning in supply. He saw it in agriculture when the storage bins looked full on paper but the physical grain was gone. He saw it in nickel 2 years ago when the London Metal Exchange had to halt trading because the metal simply did not exist. The pattern is always identical. Paper markets trade in abstractions. Physical markets trade in reality. And when the abstraction diverges too far from reality, the reconciliation is catastrophic. This is exactly what is happening in silver right now. Not in theory, not in projection. In real time, in silence, behind the scenes. The silver market has been in structural deficit for 3 consecutive years. Demand has exceeded supply by over 700 million ounces in that period. 700 million ounces that had to come from somewhere. That somewhere was existing inventory, stockpiles built over decades, reserves held in vaults that everyone assumed would last forever. They are disappearing. The London Bullion Market Association reported that silver holdings in London vaults dropped by over 30% in 2 years. 30% of one of the largest silver storage facilities on Earth. Gone. Shipped to India, shipped to China, shipped to industrial consumers who actually need the metal. The COMEX registered inventory has fallen to levels not seen in decades. The metal that backs the paper contracts is bleeding out. And the market pretends not to notice. This is the danger of paper markets. They create the illusion of liquidity. They create the illusion of supply. They allow traders to buy and sell claims on metal that may not actually exist. For every ounce of physical silver, there are dozens of paper claims. Some estimates say hundreds. Nobody knows the real number because the system is designed to obscure it. But the physical metal does not lie. You cannot deliver an abstraction. You cannot plate a solar panel with a futures contract. You cannot wire an electric vehicle with a paper promise. The industrial consumers need real silver, and they are taking it faster than the mines can produce it. Global mine production has been flat for a decade. 800 million ounces per year. Not growing, not responding to higher prices. The easy deposits are gone. The major discoveries happened 30 years ago. The new projects are smaller and deeper and more expensive and more politically complicated. Peru is drowning in social unrest. Mexico is nationalizing its resources. Bolivia is a political earthquake. The countries that hold the silver are the countries least likely to let it leave quietly. Meanwhile, demand is exploding. Solar panel installations consumed over 150 million ounces last year. That number is growing by double digits annually. The green energy transition that every government is mandating. The electric vehicle revolution that every automaker is chasing. The 5G infrastructure that every telecom company is building. All of it requires silver, and none of it is optional. These are not speculative use cases. These are policy mandates backed by trillions in subsidies. The demand is locked in, the supply is not. And here is what terrifies the veteran after 40 years in these markets. The people buying physical silver are not talking about it. They are not publishing reports. They are not giving interviews. They are simply accumulating. Central banks in Asia are quietly adding silver to their reserves. Industrial users are building strategic stockpiles because they cannot afford disruption. Wealthy families in Europe and the Middle East are taking delivery and moving metal to private vaults. None of this appears in headlines. None of this moves the paper price. But all of it drains the available supply. This is how the disconnect grows. Paper traders look at charts and see a boring market going nowhere. Physical buyers look at vault inventories and see a crisis approaching. Both cannot be right. And the veteran promises you, the paper traders will be the last to know. When the inventory finally hits zero, when someone with deep pockets demands delivery and the metal is not there, when the exchanges face the choice between default and explosion, that is when the paper price catches up. Not in a gradual adjustment, not in an orderly repricing, in a violent dislocation that will leave most participants speechless. The move will not be measured in percentages, it will be measured in multiples. 2 times, 3 times, maybe more, all in a matter of weeks. And everyone will act surprised. But the people who understood the physical market will not be surprised. They will simply be wealthy. The transfer is coming. It always does. The window is still open, but it is closing. January 16th is not a random date. It is when certain numbers cross a line that cannot be uncrossed. After that, the conversation changes forever. People will not need anyone to tell them. Their screens will do it for them. Most people will still ignore it. That is exactly why it works. History has shown this cycle over and over again. The masses wait until the price has already moved. They wait until the headlines confirm what the smart money already knew months ago. By then, the best entry is gone. The risk-reward has flipped. The asymmetry has vanished. What remains is a crowded trade filled with late arrivals chasing momentum. That is when the professionals exit. That is when the trap closes. But right now, the trade is empty. The narrative is dismissive. The crowd is elsewhere chasing AI stocks and crypto coins and whatever the next shiny object happens to be. Silver sits in the corner, forgotten, unloved, mispriced, and that is exactly where the veteran wants to be. He has learned over 4 decades that the best opportunities do not come with validation. They do not come with consensus. They do not come with comfort. They come with doubt. They come with loneliness. They come with the sinking feeling that maybe everyone else is right and you are wrong. That feeling is not a warning. It is a signal. When the math says one thing and the crowd says another, bet on the math. Every single time. The math on silver is undeniable. The deficit is real. The inventory is draining. The industrial demand is accelerating. The monetary debasement is guaranteed. All of these forces are converging at the same time. And the price has not moved yet. That is the setup. That is the opportunity. January 16th marks the moment when the math becomes impossible to ignore. What happens after that is not speculation. It is inevitability. The only question left is simple. Will people position themselves before the move? Or will they watch it happen and wish they had? The veteran has made his choice. He made it years ago when nobody was paying attention. Now the rest of the world gets to decide. The clock is ticking.